is Gustav, and today I'm going to go over a little bit more about MakerDAO and DAI, which has really served as the backbone of decentralized finance. I'm sure you guys have heard a little bit about what's been happening this summer. But today I'm going to go in, what is DAI actually and its place in the ecosystem, as well as some of the things that's going on for the next year. So first off, my name is Gustav Arentoft. I work from the Maker Foundation. I'm based in Denmark. I am Danish. And prior to joining the Maker Foundation, I was living and working in Argentina, doing consulting for a software development company within financial technology. So since MakerDAO is a stablecoin project, this gave me key insights into, how does an emerging economy like Argentina work? Why is it important that we have tools such as DAI, which can come in and serve as an alternative to the local financial environments in places where they potentially aren't working, or just as an onboarding tool for anyone who wants to participate in the very growing digital economy. And on the agenda for today, I'm going to go a little bit into DAI, a decentralized stablecoin. How does that actually work? I'm going to show you the complete decentralized monetary system of the MakerDAO protocol. And then we're going to go in and talk a little bit about DeFi, the overview and the current state of it, some of the things that happened this summer and where the space is going. So first off, DAI, or the version we have it now, is called multi-collateral DAI. It maintains a soft peg against the US dollar via an oracle price that goes into the system. The reason for it being against the dollar at the moment is just that that's the largest currency in the world, the most used currency in the world, and it functions very well as a unit of account in many, many countries all over the world. However, the system is very flexible, so in the future there's also plans from the community to start pegging DAI to other currencies. That could even be, you could even imagine a world where we would have a Korean won DAI. DAI is also classified by compared to other centralized stablecoins where they're just backed by dollar deposits into a bank. DAI is backed by multiple asset types, all living directly on the blockchain, locked up in the protocol smart contracts. At the moment, there's around 15 different collateral types, but again, there are plans to onboard more than 30, just of the ones that are approved at the moment. In the future, the high hopes is that there will be, more than thousands of different collateral types in the system. And this ties quite nicely into some of the recent development that has been seen on the protocol side, where all the way back from the initial white paper was released, the mentioning of real world assets. So, more traditional type assets and not just crypto native assets would be used in the protocol. And for 2021, this is something that, we already know that some of them will be live over the next month. But moving into 2021, this is something that I believe we will see a pretty big shift where we will have a lot of very strong traditional asset types coming into DeFi, interacting in these protocols to give, people from the more traditional space access to DeFi services. Another quite unique feature of DAI is that we have the DAI savings rate. Currently, because we have such big demand for DAI, it's set at 0, unfortunately. But the DAI savings rate is a component in the system where you can actually go in and put in a native interest rate, a native savings rate directly on DAI itself. And all of this, including the governance of the system, the assets in the system, the current state of the system, is completely open and transparent. Which is, one of the key features of having these DeFi protocols on the blockchain is that, anyone can go in and verify, do they actually have the assets they claim? Are they actually, backed? Are they, stable? Are they above water in terms of liquidity? And the transparency also extends to the governance. So DAI and the MakerDAO protocol is governed by a DAO, decentralized autonomous organization. Which basically, in a community-based voting, based on the Maker token, people are taking decisions that then gets implemented on the blockchain in the protocol. And the combination of all of these features and tools here is really, what we believe will bring the scalability to the DeFi industry. Currently, DeFi is a little bit capped by the amount of collateral available in the crypto space, the crypto native collateral. So, being able to bridge new asset types into the blockchain and using them in an efficient manner is something that will, play a huge role in scaling DeFi to the masses and making DeFi something which will be available, all over the world in a big way, right? DeFi already now is available all over the world, but it's still quite limited in the participants. There's only maybe like a couple of million people who is interested in this space currently, but the big hope for the future is that we will include, I think there's this saying that, how do you onboard the next billion, right? But the scalability is a huge aspect of how we get DeFi out to many more of the people who needs it in their everyday lives. So this is like a quite a basic graphic of how the collateral aspect of the Maker protocol works. So we have these things called vaults, which is basically where you can take collateral, you can deposit into the system, and then based on the value of your collateral, you can then draw DAI against it. And this is the moment of creations for DAI. So whenever DAI is created, it's because there sits some collateral in a smart contract. It's always over collateralized, but there sits some collateral in a smart contract that backs the value of the DAI directly on the blockchain. So this also means that in the case that the value of the collateral drops, the protocol automatically goes out and liquidates the position to basically pay back the DAI and burn it. So we won't end up in a situation, where the collateral drops, but the DAI won't get burned. So we would end up having under collateralized DAI. And then finally, if you want to retrieve the collateral you deposited into it, you just repay your debt, similar to how it's quite like the analogy is often to like a mortgage, right? Like you buy a house and then you get a mortgage on it that you basically use to pay off the house, and then eventually when you then repay your entire debt, then you own the house in entirety, right? So here again, if you want to retrieve your collateral, you need to repay your debt before you can pull all of it out. And with a system like this, that also means that for every single DAI you see out in circulation, there's always an excess of collateral. So this is some of the monetary components of the MakerDAO protocol. So the kind of like the monetary ecosystem. So you have the currency DAI, which functions as a like unit of account. It's a medium of exchange being sent all over the world, and as well as being used, especially in emerging economies, as a store of value. And also with the DeFi protocol, where you can earn a yield on DAI, for example, supplying it to Compound or Aave, or some of these other DeFi protocols, you can also earn a pretty strong interest rate on DAI participating in DeFi protocols. So these are like the three main components of what a currency is, right? A unit of account where you price things, a medium of exchange, you're able to send it to people, receive it from people, as well as a store of value and something you want to keep your money in. A lot of other cryptos, they kind of like have a hard time functioning as a unit of account. It's super difficult to price items in Bitcoin or ETH. Because the price fluctuates, it has volatility, as well as just if you buy something that costs $10, it will be very difficult to translate that into a meaningful Ethereum or Bitcoin price. The stored value simply, since DAI is pegged to the dollar, but you have interest rates that are available to earn on it from the ecosystem. That means that DAI also stores, functions very well as a stored value, especially if you're looking to escape, for example, local inflation. On the left side, you see the DAI supply. It basically comes from people depositing collateral into the system, minting DAI. All this has got all the parameters around this part of the system is managed by the risk governance of the Maker token holders. So they set the parameters for how much can you borrow against your collateral, what are the liquidation threshold. So what is the loan to value. For example, in ETH, it's 150%. So for $150 worth of ETH, you can maximum take out $100 worth of DAI. And then one of the key jobs is to really balance the money supply and demand. So when we have the demand side of DAI, a lot of it is generated from people using it in different product protocols, using it as a medium of exchange, store value, paying with it to merchants. But since they also have the DAI savings rate I mentioned earlier, in case that, for example, we need more DAI demand, they have the ability to turn up the DAI savings rate and thereby increase the amount of people who would be wanting to hold DAI because they now earn a native interest rate on it. But apart from that, the DAI demand is coming a lot from a lot of the partner integrations that we have, currently standing at more than 850 partner integrations globally. As I mentioned, we have a very strong partnership integration track record. We've also seen very, very strong growth in DAI. DAI has grown from being around 120 million DAI in June, and today we have almost 1 billion DAI out in the wild. And this has, of course, also meant that like the on-chain transactions have skyrocketed. So this is just from July, and this is, of course, doing a big part of the yield farming craze, but we really saw a huge uptick in DAI transactions. And just to mention it, when it refers to Psy, that is the old version of the system, which was only backed by ETH and didn't have this multi-collateral feature to it. So today we have DAI backed by a multitude of different collateral types rather than just having Ethereum. All right, so now going into the properties of decentralized finance. So immutability is something that comes directly from the blockchain, right? You cannot go in and censor transactions or give people certain conditions depending on where they're from. And the blockchain in itself is also immutable. So the transactions that happen on the blockchain are final. So that also means that whenever you're participating in DeFi protocols in a non-custodial way, the money, for example, that you earn from doing so is your money. Like no one can come and take them from you, unless, of course, there's a protocol bug or something, which hopefully doesn't happen. But in general, it is seen as like an immutable system. The blockchain also brings transparency to it, right? So all the DeFi protocols are, as I mentioned earlier, publicly verifiable. You can always go in and see the state of each system. And I think this is also something that, can come and bring confidence to you. At the same time, all the code is open source, which also means that it is being verified by people from all over the world that can go in and take a look at the contracts, take a look at like, what does the engine actually, how does the engine actually work? And this is also something that basically means that over time, as the protocols mature, with the code being out in the wild and more and more people having a chance to take a look at it, the resiliency also increases, right? So whenever you look at potentially participating in DeFi, I would always recommend that you take a look at like some of the older protocols, some of the battle tested ones. We did see this summer that some of the newer ones that weren't battle tested, they were transparent, but they hadn't really been audited in the same way. And then another topic is really the unbiasedness of DeFi, right? So if we take like the comparison to traditional finance is quite biased. So depending on who you are as a person, where you're from, your race, your religion, your ethnicity, you might get wildly different opportunities in traditional finance. But DeFi is completely unbiased. It's open for everyone, everywhere in the world. So it doesn't matter whether you're from Korea, Denmark, Argentina. You get the same rates, you get the same opportunities, and you can participate in the same fashion. And this also relates quite a bit to where do we actually need this? So of course, DeFi is a digital economy. So there's opportunities for people from all over the world. But in general, the opportunity is of course much larger for the people who comes from regions where they currently don't have the same access to financial services or infrastructure that we have in some of the more developed parts of the world. So we have seen a lot of uptake in countries of that order. Of course, our biggest markets for DeFi is still a lot of the Western countries, Europe, the US. We also see Asia coming on quite a bit, Korea, China, and interest also from Japan. And then outside of that is really, the emerging economies that are pushing quite high growth levels in terms of, being part of the decentralized finance, kind of like the alternative to the legacy system, right? So the current state of DeFi, this one is from 20th of October, so it's around 2 weeks old from when I had to finish the presentation for this, and now we're above 12 billion. So there's been a really big increase in the amount of value, so the amount of money basically and crypto assets locked into DeFi. And I think this has really come from kind of like the compounding effects of everything being open source and everything being, compatible with each other. So basically, a lot of these DeFi protocols are built from different parts of other systems. It's very easy to reuse other people's code, and this really accelerates innovation, right? So whenever you go out and you want to, build a new DeFi project, there's most likely a lot of the building stones that you already need has already been built by other people, so you don't have to start from scratch every time. I'll also tell you a little bit more about that in the next couple of slides, but let's go a little bit more into the state of DeFi. So the state of DeFi, you can see we kind of like have some of the top protocols like Uniswap, which is a decentralized exchange that has had a massive growth. Maker is currently the second largest DeFi protocol with more than $2 billion in the system. But I think here, kind of like the diversity of what DeFi represents, it's really, as you can see, a lot of what you could say traditional financial services, but repackage it into a blockchain and decentralized form, and then offer to people directly on the blockchain. So the categories here, you see, exchanges, so trading, you see lending and borrowing, asset management, derivatives also for trading. And in general, there's a lot of these different protocols that, come with wildly different services and can really serve very, very different types of users. So you have some of the ones that cater more to the more casual users, and you also have DeFi protocols being created to the quite advanced users. So it really it almost doesn't depend on which end of the spectrum you are, whether you're just getting into it or whether you have been part of it for a long time and really understand the protocol well. There's different protocols for every single need. And I think this is a very, very beautiful thing of DeFi, and a lot of these protocols work with each other. So for example, almost all of these protocols here uses DAI or the Maker protocol in some shape or form, or interacts with us in some shape or form. So this is also a little bit about like how DAI, because it is the only significant decentralized stablecoin, has really become like the backbone of this emerging industry, right? Whenever you go and you create a decentralized financial protocol, you also often want to use assets that kind of like align with your vision of decentralization. And therefore, using the largest decentralized stablecoin has kind of like been the go-to model for a lot of these projects, or in some way interacting with it. So therefore, we are very happy to see that like whenever the DeFi space is growing, that also means that DAI as a currency really keeps on manifesting itself as the stablecoin that you really want to be using inside these protocols here. Other stablecoins are of course also used. But DAI seems to be the preferred one for sure. And basically, decentralization in this part of the space really means that it's a completely free and open ecosystem where anyone, from all over the world can participate. The beauty of the blockchain is really that whenever you launch on a blockchain like Ethereum, for example, you're global from day one because it's a global infrastructure. It isn't, like normally when you launch a startup, you would launch like locally inside one country. You would really focus on that one. With Ethereum, you can really go global from day one. So that also means that you can hit a massive audience immediately. And if you build a strong product, there's a really good chance for you to acquire a lot of users, a lot of liquidity, a lot of activity very, very fast. And this has really, pushed the space towards building these new products, businesses, and industries that has been emerging over the last couple of years. But still, we are really only on the forefront of things, right? We really see this space to continuing to grow in a pretty strong fashion, and especially 2020 has really proved this, right? When I talked a little bit earlier about kind of like the composability of these things, right? It's often referred to kind of like this being the money Legos. Of course, with the Maker Foundation having a Danish founder, I'm also being Danish. And Lego is being Danish, so we feel like this resonates quite well with our DNA, this reference. But basically, what it means is that you can take bits and pieces of other protocols and integrate it into your own. So, for example, on the right side, It's kind of like it's a little bit outdated now. They have more products on it now, but the composability of Serion, for example, which is a user aggregation application where they then take and create a very easy to use front end, where they plug in, for example, Maker, Coinbase Wallet, Compound, Uniswap, MetaMask, Trust Wallet, and so on. So they have like all of these different products sitting in the back end, and they just create like a really nice front end where people can interact with it in a very easy and user-friendly way. So one of the things that really happened is that since everything is being built together in this way, that really accelerates the innovation, as I mentioned earlier. So whenever you build a product, you can take other products and that thereby you can really create even new types of services, things that wasn't possible before. But kind of like combining these things together, you get a new product. So this is one of the things that is incredibly awesome about this space, is that a lot of projects in that sense become natural partners, even though they could look at competitors on paper. For example, Compound, which is another, it's a peer-to-peer lending protocol, and then you have MakerDAO, which also provides some of the services look similar. But Compound, for example, is one of the biggest users of DAI. So there you actually have two products that some people would claim could be competitors, but they're actually not. They're very trusted partners. So I think that's really cool about the space. And this is like a little bit of like an overview, going back to what I mentioned about before. We have kind of like Ethereum sitting at the bottom as like the base layer. Ethereum is the blockchain that has by far the most DeFi activity. I think this, they had the first mover advantage, and kind of like what that manifested itself into is that now they just have most of the applications, most of the infrastructure, most of the assets. So the applications, they really look to see, so where do we have a lot of developer activity? Where do we have a lot of user activity? And that often comes from, how easy is it to build applications here? So on Ethereum, you already have a lot of the building blocks you need through the money Lego reference to build the new protocols. You also have a lot of things such as like different types of wallets, in general, very good developer documentation, and just a lot of stuff that makes it very easy to build things on Ethereum. And then you also, of course, have a lot of the assets. So right now, most of the economic activity on smart contract-based blockchains happens on Ethereum. And over time, this really like compounds itself, because the more economic activity you have on one chain, the more economic activity it attracts. So, and we also saw this over the summer, right? Where we actually saw that, for example, Uniswap started having more trading volume than Coinbase, for example, which is one of the biggest centralized exchanges. So as this continues to grow, as the applications mature and the services becomes even better, we actually see a lot of the activity where, before most of the crypto activity was on centralized exchanges, and it still is, but we're definitely seeing a strong growth in this activity, moving more towards the decentralized space, the non-custodial space, which I personally think is quite positive. This is another slide a little bit about, the composability of these different protocols. So basically what you see here is like all the small dots between them. So the yellow small dots and the red small dots, they reflect users that comes and uses, 2 or 3 protocols. So here you really see that all the applications are actually linked together in some way or some fashion. Quite interesting that the once the users start using DeFi protocols, they actually often open themselves up to using several of the different protocols, interacting with not just 1 or 2, but being part and present in many of them, even though they might do similar services. But I think this is a very, very interesting view into what DeFi is. So DeFi really, so this is like a very Silicon Valley statement. So I'll apologize a little bit about that, but DeFi really looks to unlock the power of the blockchain to create economic empowerment. And with economic empowerment, it really enables people to take control of their own finances. It's the first time in history where we see financial services, coming from protocols without centralized counterparties going in and kind of like ensuring the services, but these rather being generated from a network of players, from communities rather than centralized institutions. So this is really where the economic empowerment comes in. You can take control of your assets, it's your money, and you can participate in the way that you want to do. And moving forward to 2021, we have a big hypothesis that we will see even more products being created. There's still a huge opportunity here for developing new products in the ecosystem. We've seen some of the products launching, just in the last couple of months being wildly successful. Even though that there's been a lot of activity, it's still really only on the forefront. It's a very long road, right? And we're just like in the initial stages of where a lot of the projects want to be. So the ambitions here are very, very high. One thing that I'm personally very excited about as well is that in 2021 that we will see more and more traditional institutions, traditional assets moving into DeFi and wanting to participate in these protocols here, because a lot of the financial innovations that happened in DeFi can be used with any type of asset, right? It doesn't have to be a crypto native asset. So once we kind of like see that paradigm shift come, that will also mean that we will get a much broader exposure to the general community and the general world. And that's one of the things that I'm personally really looking forward to seeing how that part of the space will play out in 2021. So, look forward to even more innovation and even more activity on that front. So thank you very much for tuning in. If you guys want to learn more about MakerDAO, go into makerdao.com. We also have our MakerDAO Twitter at MakerDAO. And if you guys want to reach out, to learn more about DAI, if you guys are looking to build something with DAI, wanted to get in touch with us to work closer with the foundation on some topics around DAI, feel free to reach out to me personally. So, I mean, since the space is still very, very young, there's still like a long way to go, I think, before we will see like a major impact. However, something that we have seen, internally and personally is that we already now see quite a bit of interest from, traditional institutions. So even with the space being this young, kind of like with all the buzz that has happened over the summer, we have seen quite a big number of large institutions reach out to us to learn more about it, and to figure out how can they potentially become part of the new digital economy, right? I think this, if you look at like similar spaces that happened in the past, but like the emergence of fintech, it's like which is now recognized as like almost a separate industry, right? You see a lot of these like newer, innovative players coming in and challenging the ways that things have been done traditionally, and with great success. So I personally believe that we will see a similar thing with DeFi, where DeFi eventually will become closer and closer with fintech and traditional finance. So kind of like right now you have them kind of like a little bit more apart, but I believe that they will be coming together, and that we eventually will see DeFi be part of the fintech offerings we see from more traditional fintech companies. Potentially also could be part of the offerings that banks have. Yeah, so I think so Europe, in Europe we have kind of like some of these crypto hotspots, which is a little bit more anarchistic, I would also almost say. So we have, for example, a place like Berlin, which is quite an unusual place. So in Europe we see a lot of the more the projects coming out that has like a very strong focus on like decentralization and the importance of that. In the US, we see a lot of the big players coming out from. We also have a very big team in the US, and that is also where we see a lot of the traditional financial markets coming from. There's a lot of the big investors is coming from US or Asia. So the US is a little bit more finance focused, I would say. And then we have actually been very positive about the development in Asia. So something that I started talking a lot about last year was that in Asia, we would see more and more products built specifically for local markets. Because, you know, in Europe, we kind of like tap into a lot of stuff that is happening in the US. But in Asia, you actually see protocols that would, you know, build, you know, a similar protocol to Compound, but specifically focused on Korea or specifically focused on China. So we have seen a lot of like a localized movement of DeFi in Asia, which I think is very positive. And, you know, fortunately, all of them uses DAI. So, you know, we have seen a mobilization of a lot of local teams to start building, you know, DeFi services that you know, really, you know, goes towards a specific local market in Asia. Yeah, so I mean, we saw it crossed 1 billion in, I think it was in February or something, and then now it sits at 13 billion, right? Like, it's very difficult to give estimations. I don't think we'll have quite as explosive growth as we've seen in 2021, you know, where the market, you know, 15x or something like that so far. But my expectation is that we would probably hit around, you know, the double of what we have today. So in 2021, I would look at like 25 to 30 billion dollars in the DeFi protocol, something of that order. But of course, there's a lot of things that plays into it. So first is like, how will the new protocols capture value? How will the current protocols retain and increase value? And, you know, with Ethereum 2.0 coming out, looks like in the next couple of months, it'll also be very interesting to see how will DeFi play a role into ETH 2.0. So there's still a lot of unanswered questions, but I'm definitely expecting still a pretty steep growth, and I would expect 25 to 30 billion by end of 2021. Yeah, so I think it really depends on the user profile, right? As I also mentioned in my presentation, there's definitely some type of users who has a lot more to gain, who can kind of like leapfrog with having almost no financial services into having very strong financial services. But for the individual users, you know, if you're already participating in the online economy, if you're looking to onboard yourself into crypto, I think DeFi gives, you know, a very, very good opportunity to you know, increase your exposure in a less volatile way, right? So for example, if you only work with stable coins, you can still actually have really, really good savings in DeFi without necessarily taking on the volatility risk of Bitcoin or Ethereum. So I think even for like the more casual users, there's a lot to benefit if you're looking to interact in the online economy. And it also it unlocks a lot of doors. I mean, there's so many cool applications to try out, you know, both in DeFi, but also within gaming, you know, the art space, and on like really like a lot of different fronts. So really depending on who you are, I think there's a lot to gain here. But, you know, getting exposure to this growing online economy without necessarily taking on as much risk as you would if you just bought, for example, Bitcoin. Yeah, so first off, I'm a little bit unhappy that I couldn't be with you guys in Korea today. You know, I had several trips to Korea last year and celebrated New Year's in Korea last year, and I really, really love the country. I have a lot of great friends there. So unfortunately, with the world situation, I couldn't be there in person, but I really hope you enjoyed the talk. And also, you know, we have a local team in Korea. So if you guys are looking to talk with some locals about Maker, please feel free to reach out to them. And then I wish you an enjoyable conference, and I hope to be able to come back to Korea next year and join the conference with you guys out there.